You and I are being lied to about the US dollar right now, and it's way worse than they're telling us. I'm going to show you the troubling data in a moment, which made my jaw hit the floor. But what's really troubling, actually, is that they're actively lying to you about how bad it is, and they're creating a smokescreen right from the White House. They're lying to all of you, trying to distract you with some of these positive news stories that we just got over the past few hours. We're going to explain all of this. First, though, please subscribe to our channel. Our goal here is to make you a smarter investor by showing you the truth that the government doesn't want you to see. And having this information gives you an edge as an investor. Now, we saw some amazing headlines at the end of this week with headlines like this: Wall Street stocks rally after jobs data point to robust U.S. economy. A robust U.S. economy? They were frankly off the charts good news headlines that on the surface sound really good, but underneath is where the real trouble is. So let's go through a few of these positive headlines. First, what happened in Europe is, in fact, a game changer for inflation. Eurozone inflation is the lowest since the start of the Ukraine war. Here's the Financial Times headline: Eurozone inflation falls to lowest level since Russia invaded Ukraine. Now, this is great news for Europe. Eurozone inflation has fallen more than economists expected, but these numbers don't actually account for energy costs and food costs. That's right. I love when they do this. They actually remove the two costliest things for people and say the numbers are good. Oh, okay. So I guess we're supposed to take this as good news. So forget about how much it costs to heat your home and the food that you eat. But other than that, Mrs. Lincoln, how was the play last night? So literally, the Financial Times points out that these guys only focused on core inflation. So not energy and food prices, which are volatile. So just take the non-volatile stuff. That's how you massage some numbers. Cut out the problematic parts. But Germany is now officially in a recession, and that's actually a good sign that the European Central Bank will not, I repeat, will not raise interest rates, even though Christine Lagarde, head of the ECB, says they might have to further rate increases. But how do you do that when Germany is in a recession? But you can't raise rates. Europe's largest economy is teetering on actual collapse. You'd be an idiot to do that. So first, it was the Eurozone saying inflation is dropping across Europe. We saw those headlines. Then the market exploded as a result. Great news. And then we got the United States bomb dropped on us. A good bomb, actually. Is there a good bomb from the United States? We drop a lot of them. Maybe a glitter bomb, perhaps. That was the United States employment numbers.
Was this the perfect jobs report and perfect scenario for somebody like you, Jim Lebenthal?
This is pretty darn good.
Whoa, the unemployment numbers went down. It's the non-sexy stuff, the payroll numbers. That's right, employment numbers skyrocketed in the United States. Really? People want to work? Yes, it turns out that private sector employment increased by a seasonally adjusted 278,000 for the month. That's good news. This means that persistent inflation, the sticky inflation, seems to have peaked for now, and inflation is now decelerating. Not spiraling, not plummeting, but decelerating. Good. And people demanding higher wages is also dropping. So all of that wage pressure is dropping. And all of that means that the Fed is going to start cutting rates, interest rates. That's right. This is the bomb. This is the CME Fed watching chart, guys. These guys know what's coming, and they see the Fed being done with these interest rate hikes. All of that sounds great. Companies won't have to have massive layoffs, even though we've already seen massive layoffs. We can stop the bleeding. And we might be out of the woods on a massive recession. Great. But I don't buy it. I don't buy it because of the bigger systemic problems. All of these headlines, guys, are a distraction because the real problem in the United States is the United States dollar, the United States banking system, and the collapse of the commercial real estate market. And I'm going to show you how they're all tied together. First and most importantly, the U.S. dollar. The U.S. money supply is shrinking, and the investment money that's flowing into the United States is quickly flowing away from the United States, and it's going to other markets. That means the U.S. government has to pay a boatload of money on these interest payments. It has to pay a lot for this massive debt that it is sitting on. It's unsustainable. And so the U.S. government has an incentive right now to inflate that debt away. That's right. Inflation helps them inflate all of this debt away. And the way that you inflate the debt is you weaken the U.S. currency, which is exactly what's happening. Washington needs inflation through a weakened currency in order to afford all of these debt payments. This is the truth. This is exactly what's happening. They needed deflation before they were able to borrow at 0% interest rates, right? Now they need inflation because these interest rates are through the roof. So in other words, the US dollar is headed for collapse. Get ready. Now to the real estate piece of this puzzle. Now, between 2011 and 2022, the US dollar was all the rage. Investors from around the world wanted US dollars because interest rates were incredibly low. It created a ton of growth, right? Money poured into Silicon Valley. It poured into real estate and real estate development. You needed dollars to make these investments. We had a bull market for the US dollar. Those days are now gone. And now interest rates are so high that investors are dumping US dollars and they're dumping US commercial real estate. They can't get loans for refinances or construction. So they are leaving the United States. They're moving money into the Asian real estate markets, the European real estate markets. I mean, just walk around Europe right now. There are cranes all over Portugal. Look all around Europe. The Middle East right now. We just got back from the Middle East. Cranes all over the damn place. Huge investment money flowing into Egypt, Jordan, Saudi Arabia. That's right. Large commercial projects unfolding all over the place. So the demand for commercial real estate in the United States is plummeting while it's exploding elsewhere. And the reason this is happening is because the regional banks are going broke. They can't give out construction loans to builders. They can't refinance loans to builders. Here's billionaire Ross Perot Jr. yesterday. He sees some really big problems with regional banks and the commercial real estate construction loan market. Watch.
The key to commercial real estate today, though, will be banking. If the industry can't get a construction loan, real estate will have a recession.
And regional banks are being destroyed because U.S. dollars are flowing away from them and into money market accounts. When money flows to bonds and money market accounts, it goes away from the banks. The money supply dries up. And the Fed is having to prop up these banks right now. Just look at the amount of emergency funds and loans that the Fed is having to send to regional banks as money flows out of these regional banks. If they're going to be kept alive, the Fed is pumping all of this artificial money back into these regional banks. Just take a look here. Look back in March. Look at that. The loans were at zero. Now, after the banking crisis, the regional banking crisis, they are skyrocketing. And don't be fooled by these unemployment numbers and headlines this week. We might be avoiding a large recession by the skin of our teeth, but the US dollar is headed for a bear market, and smart money investors are starting to make smart money moves right now. That's the news update part of this video. Now, I want to show you something amazing. It's a gift, okay? If you're interested in making money, I want you to write this stock ticker down right now on a piece of paper. It's our sponsor for today's video, Element Nutrition, ELNSF. That's the stock ticker. Did you write it down? Good, good. This company is up 66% already this year, and that's nothing. Now, if we go back to July 2022, stock levels, we could see a 100% rally in this stock. So now, pay attention to what I'm going to show you here. If you're a smart investor, you will already recognize what I'm about to show you as a gift. This stock will blow your socks off. And if you're new to investing, then you'll want to pay attention to why this is such a big deal. Smart money is flowing into smaller cap innovative companies that are cheap right now. And they're cheap because they're being held down artificially by these higher interest rates right now. These higher interest rates basically are the gift that keeps on giving, and they're keeping them artificially lower than where they should be for the moment. So first, let me say that I own a lot of shares of this company because I believe in this company. And I'm actively buying more shares right now because it's so stinking cheap. We're talking 10 cents a share. That's right. So even if I buy $1,000 worth of it, I mean 10 cents a share. That's what we're talking about here. So I'm adding a lot more to my portfolio right now with this stock. In my opinion, no other company is doing what this company is doing. First, they own the patent on the only peer-reviewed, clinically studied whey protein drink in the world with proven muscle synthesis. Now, as you age, you lose muscle mass. Their Rejuvenate product has proven medical results, and you can read all of their peer-reviewed research on their website. I'll put a link in the description below. You can go and do your own due diligence on it. No other company has this patent, okay? Now the product is sold at 6,000 CVS stores and 8,000 Walgreens stores. Actually 8,400 Walgreens stores. So it's already selling millions of dollars in revenue at 14,000 stores. Now, even if Johnson & Johnson wanted to get in on this, they couldn't because it took Element Nutrition 20 years and $20 million to get this patent through all of the